Hello everyone, this is Crypto BitLaw, here with another blockchain legal brief, and today we're going to discuss a lawsuit that was recently filed against Coinbase over a collapsed stablecoin, and no, it's not Terra. So before we jump in, if you guys like this content, please hit that like button and subscribe to our channel. And with that said, let's jump right on in. Alright, so as we can see here, Bloomberg reports that Coinbase customers sue over a stablecoin that's anything but. Hundreds of GYEN purchasers allegedly lost untold millions. Crypto exchange faces skepticism amid worsening bear market. They say Coinbase Global Incorporated was sued over its role in the promotion and trading of a stablecoin that allegedly was anything but. The digital asset trading platform and the issuer of the GYEN token were accused of misleading investors about its stability, leading to millions of dollars in losses, according to a proposed class action complaint filed Thursday in federal court in Northern California. Quote, investors placed orders believing the coin's value was, as advertised, equal to the yen, but the tokens they were purchasing were worth up to 7 times more than the yen, according to the complaint. Just as suddenly, the GYEN's value plunged back to the peg, falling 80% in one day. Coinbase then froze trading of the coin, which, quote, compounded the harm by restricting many customers' ability to sell the asset, the investors alleged. As a result, purchasers of GYEN collectively lost untold millions in a matter of hours, they claimed. The lawsuit came a day after Coinbase shares and bonds plunged to new lows, signaling investor skepticism about the prospects of the crypto exchange in a worsening bear market. Coinbase shares were rebounding Friday, up 17% to $68.48 at 10:28 a.m. in New York, as the crypto market calmed somewhat in morning trading. Unlike Bitcoin, stablecoin issuers say their tokens are backed by hard assets. GYEN, which was issued by Tokyo-based GMOZ.com trust company, purportedly had its value pegged to Japan's yen. But in November, when Coinbase started trading GYEN, quote, the asset immediately came untethered from the yen, according to the lawsuit. Due to the omission of the fact that GYEN was not designed to hold a value pegged to the yen, and Coinbase's restriction prohibiting investors from liquidating their GYEN as it plummeted, several hundred purchasers lost vast sums, some losing hundreds of thousands of dollars in just hours, causing them grief, anxiety, stress, and outrage, according to the investors, who are seeking to represent a class of GYEN purchasers and asking for unspecified damages. Coinbase and GMOZ didn't immediately respond to requests for comment on the suit. Stablecoins are designed to be only as volatile as conventional currencies, whose values typically go up and down much less than those of Bitcoin, for example. The token, and in particular, the leader in the field, Tether, have drawn increasing scrutiny for the risk they could pose not only to cryptocurrency users, but also to the global financial system, with U.S. financial agencies calling for strict regulation. The crash of Terra USD intensified the worries. This case is Donovan versus Coinbase Global Incorporated at a district court of the Northern District of California. Alright, so here is a copy of the docket for those of you that are interested. A link is going to be provided down in the description below. And we can see this complaint was filed on May 12th, and not really much is happening. I guess there was an electronic filing error. Yeah, and there's a scheduling order. I mean, it's only been a few days since this thing was filed. Here's a copy of the complaint. As we could see, they're suing them for negligence. Conversion, that's a fancy way of saying civil law theft, violations of California unfair business practices laws. Let's see what else. The Securities Act violations. They want to get certified as a class. The usual stuff. and then, of course, it pretty much goes over this complaint, everything that was stated in that article. But if you guys want to check out the complaint, it's going to be linked down in the description below. All right, so I have two main takeaways from this. I guess first and foremost, if you're going to be buying an asset, in particular digital assets, cryptocurrencies, stablecoins, NFTs, anything like that, you need to do your own research. And I think that this case right here is an example of people that didn't really do their own research. They didn't do their own due diligence, and they have buyer's remorse after the fact. I can recall at some point last year moving some money into Tether because I thought it would be a safe haven as opposed to other more volatile assets like Bitcoin or Ethereum or Doge or anything like that. And I considered, oh, hey, Tether would be a good place to put this. And then there was some information that started coming out about the fact that Tether was backed by Chinese commercial paper, cash equivalent level securities. And I thought to myself, hey, this doesn't really seem all that stable. If these companies like Evergrande, remember that last year, the whole Evergrande fiasco, and how it was causing waves and ripples in the Chinese housing market, and we didn't know whether this contagion was going to spill over and whether or not it was going to affect Tether. I got scared as soon as I heard about all that, and as soon as I learned, I took my money and I moved it to something safer, which I considered safer, which would be USDC, right? To me, it seemed like a safer play than Tether. And it's the same thing that we recently saw with UST, with Terra. And now people are getting a little taste of that here with this GYEN stuff, right? And so it's people want to wag the finger at these exchanges for making bad investments, right? And not doing their due diligence and not doing their research. And all I can say is just shame on you. You should have known better. You should have done your due diligence. You should have done your own research. It's nobody's fault but yours, right? Even if you get rugged, take the time to vet your team. Who are you putting your money behind? Money doesn't grow on trees. People are just being completely reckless with their money. Everybody's a genius in a bull market. And then, when the tide goes out and the bear market comes around, we could see who was out there with their pants off, as that old quote says. But to another point, and where I could agree with this suit, okay, once the crap started hitting the fan, and this thing started losing its peg, and people started losing money, yeah, you should have an opportunity to be able to get out, right? And I've experienced this personally too with Coinbase Pro, namely, in the past, where during a high volume trading session, you try to log in, and it wouldn't even let me log in at one point. Coinbase Pro, the mobile app, I couldn't even do it on a computer. And you can't put your trade in. You can't execute any orders. And you're pretty much stuck in your position. You can't get out. And that's unacceptable. And so, for those reasons, I would agree with that point of the lawsuit. That yes, Coinbase could have contributed to their damages by pretty much prohibiting them or not granting them the ability to exit their positions. And that is a shame on you and a finger wag at Coinbase. And that's one of the reasons, why in part, I don't really use Coinbase that much anymore. I'll use other exchanges. No one's perfect, but I know, for example, for me, FTX has had more uptime than Coinbase, and cheaper fees. So I guess take that for what you will. But I thought that this was an interesting case. I don't know if they're actually going to get certified. I don't know if the judge is going to allow them to proceed. Maybe on one of the issues, maybe not on all of the issues. Who knows? Maybe the judge will let them all through. But it'll be interesting to see where this goes and how this shapes out, and to see what comes of this case. And certainly we'll keep you updated as this case continues to develop. So with that said, I hope you guys enjoyed this. If you did, if you like the content, please hit the thumbs up and subscribe to our channel. We'd appreciate that. And thank you again for watching. And we will see you all in the next video.